Is Rivian the most undervalued stock in the US market right now? In this video, we're going to be trying to find out exactly this. We're going to be looking at their financial data, putting it into my system and reviewing some of the recent news to help us see whether or not this stock is actually a sound investment. Rivian Automotive has recently achieved significant milestones in vehicle production and deliveries, addressing previous supply chain challenges. In the fourth quarter, the company delivered 14,183 vehicles, surpassing analysts' expectations and marking a 42% increase from the previous year's quarter. Production has reached around 12,727 units, exceeding estimates. In the full year, Rivian produced 49,476 vehicles and delivered 51,579, aligning with its targets of 50,500 to 52,000. These achievements have positively impacted Rivian's stock performance, with shares rising nearly 19%, and actually as of right now, today, Rivian stock is actually now up 24%, so they have done massively well. So let's do a little dive into Rivian. Quick disclaimer before I do start this, I do not hold any Rivian stock. I'm not biased towards this stock at all. This is just purely off of my research. So having a quick look on the year chart, we are currently down 21.40%, so it's clearly been a bad year. With this recent news coming in, we are now starting to climb back up. And on the 5-year chart, we are down a massive 84.46% from 2022, where we were last at our peak here. And now we're just massively down, and the current price is $16.45. And of course, on the daily chart, we are up 24.81%. So what is Rivian on a basic scale for the people that aren't familiar with this company? Rivian is an American electric vehicle manufacturer that specializes in adventure-orientated vehicles, commercial EVs, and sustainable automotive solutions. As well as being a manufacturer, Rivian, of course, designs and develops this technology, such as the skateboard platform, which is a modular vehicle platform integrating batteries, motors, suspension, and thermal systems. This allows flexibility in designing different vehicle types on the same foundation, so this will definitely keep costs down when going from adventurous vehicles to potentially moving into a more road-style vehicle. With Rivian being deeply committed to environmental sustainability, such as the carbon neutral goals in which they have, and material and manufacturing goals, which focus on using sustainable materials and energy efficient manufacturing processes. With them having large partners in the game such as Amazon, which are vital for the commercial EV production, and Ford, which has previously invested in Rivian EV technology. So what is the profitability outlook for Rivian? Rivian's path to profitability remains a critical factor. The company is working to reduce its costs and improve gross margins, with analysts expecting it to achieve profitability by the end of 2024/early 25. Rivian's efforts to streamline its production and enhance efficiency are key to improving financial health. Rivian is definitely in a competitive landscape. However, it is clear that it is not in direct competition with a lot of its so-called competitors such as Tesla. It does share the actual fact in which it is an EV manufacturer. However, they are very different markets. Tesla is more of a road style vehicle, and Rivian is a more adventurous style vehicle. It will be interesting to see if these sort of vehicles come to a more European market, as we do have Teslas in Europe, of course, but I've never seen a Rivian on the road. It would be something that I would be interested in looking at as a British person. So let's put their financial data into my system to see whether or not this is a current buy or sell. So looking at the quarterly earning reports, however, this does not include the recent Q4 earning report, as I don't have the data for this yet. We can see here the last five quarters on a liquidity ratio, retention rate, and free cash flow. The reason why I put them all on screen at once, if you are a regular around here, is because I don't feel as if this is too necessary to look at. But if you do want to look at this, you can pause it now. Rule of thumb, it is looking good on a debt to liquid cash ratio. The retention rate is of course quite bad, and we are expecting this to turn profitable soon. However, looking at the retention rate here, it does seem hard to believe, as we are massively down still, and the free cash flow is somewhat improving quarter on quarter. Looking at a 365-day exponential chart, we can see here that we are well above the trend line, and the trend line is actually projecting a slight decrease, as well as the volume. Going off of this, I don't think we can really say too much, as it is all a bit up in the air at the moment. When we look on a smaller scale on the 91-day moving average, we can see here that the trend line is actually projecting this to go up, and we are pretty much on the trend line. I don't know if this has updated since the massive jump. In fact, I'm pretty much positive it definitely hasn't. So it will be interesting to see this once it has updated. So after inputting the PE ratio myself here, this is a bit of a fabricated PE ratio. It is what the analysts are putting this at online. However, it's hard to get the data for. The PE ratio is 2.81. The 52-week high is $20 and the low is 8, this being a difference of 12. The current price is 16 and it has a beta rate of 2.12, and currently I would say that is a positive thing, being the direction of this stock is positive currently. Now we're going to look at the intrinsic value, which is a very important metric when assessing the valuation of a stock. And this is incredibly bullish. This is why I think this stock is undervalued at the moment. So if we look on the left here, we have Graham's original formula, which can be seen as a bullish indicator. And on the right here, we have the revised, more bearish indicator. Despite this, both of them are saying buy. Here on the left, we can see an intrinsic value of $79 using a margin of safety of 75%. We get an acceptable buy price of $59, and currently we are at $16. So there is massive room for growth. If we look on a more bearish formula here, we can see the intrinsic value is $42 with the current buy price being $16, of course, and a margin of safety of 75%. We have an acceptable buy price of $31. So there is massive room for growth within this stock according to this system. Now, if we look at the Peter Lynch's value, this is kind of crazy. I don't know if this is exactly right, but there's nothing that should indicate this to be wrong apart from the PE ratio being slightly made up. But again, this is what is available online. We can see here the results show an 11.711 result here, which means that we are massively undervalued on this stock. With the future earnings per share growth just being taken from Yahoo Finance on the Analysts page, this is probably even a potential low ball. Again, I don't want to hype this stock up too much, especially now we've seen this massive increase in price today. But it's hard not to when I'm looking at these figures, and these are really bearish indicators. So it is a bit too good to be true in a way. So I would definitely step with a bit of caution on this stock. But despite me saying that, these are looking very bullish. So that's enough about my opinion. Now let's see what the analysts think about this stock. So having a quick look on MSN here, we can see that this was taken before the earnings report, and we are now up to around here at $16-ish. So I reckon we're going to see a bit of a trendline meetup again, but I do think over 2025 this could definitely be a stock to return to greatness, as obviously we are down massively at the moment with the price of this stock. The analysts have projected, of course this might be slightly outdated now, a high of around $19 and a low of $4. On this indicator, we can see that this is a bit more up to date with the current price being above the $16 mark. They are actually projecting a target price at the tail end of 2025 to be below $16, which is quite remarkable. Not in a good way, of course. And based off of 28 analysts, they are projecting this to be a buy. Personally, looking at my system, but obviously this might be personal bias from me, I would be putting this at a strong buy right now, just because of the fact that how undervalued it seems to be in my system. Of course, this is to be taken with a pinch of salt due to the fact that we have seen a massive price hike today. It's not actually a good time to buy despite it being undervalued, just purely because of the amount of volume being traded into this share at the moment. I will be waiting to see a bit of consolidation, and if I see a bit of sideways action, that will be a good time to be buying in. If I do see a drop off, then it will take another assessment, but for me, I'll be looking for sideways action if I was to get into this stock. So that does conclude this video. I don't want to ramble on about this for too long. Please do leave your thoughts in the comments on what you think about this stock. Is my system getting this all wrong, or is it actually right? I would love to hear your thoughts on this in the comments below. Please do leave a like, subscribe and share. It will be greatly appreciated, and I will see you for the next video.